Hello, welcome to the weekly technical analysis review here at xm.com. I'm Rafi, currency analyst, and today is Monday, July the 23rd. The pairs we're going to be looking at for this week are the dollar-yen, the euro-pound, and the Aussie dollar. Starting first with the dollar-yen pair, we can see that the near-term bias is somewhat neutral to bearish at the moment. RSI had risen into overbought levels before retreating sharply to the 50 neutral area. We can see that prices today found support at the upward trend line that's been in place since March this year. If prices hold above that level, we should see the medium-term uptrend staying intact with immediate resistance coming at around 111.50. Above that level, we could see resistance at the 112 handle. And then we have that 6-month high of 113.16, which was touched earlier this month. And then we've got that strong resistance area around 113.40, which we can see price has struggled several times back in late 2017 and in early this year to break above that region. However, if prices were to break below the ascending trend line, support should come first at the 50-day moving average around 110.50. Below that, we've got another strong support level around 110.30, and then not too far below that, we've got the 200-day moving average, which is currently flatlining around the 110 level. Breach of those support levels could signal a deeper bearish correction. Let's now turn to euro pound because prices did manage to break above that slightly downward sloping channel which had been in place since October of 2017. Prices having broken above that level didn't manage to reach the key resistance area, which is the 50% Fibonacci retracement of the down leg from 0.9306 to 0.8620. If prices do manage to break above that level, we could then see the possible shift to more bullish outlook in the medium term, with the next resistance coming at the 61.8% Fibonacci at around 0.9043. To the downside, the upper channel should act as immediate support, and then not too far below that we have the 38.2% Fibonacci at around 0.8820, and below that we have another key congestion area around 0.8840. If we look at the momentum indicators, RSI is flat just below overbought levels. So we have seen an easing of that strong upside momentum that we saw towards the end of last week. But there is a possibility of further gains in the near term. But in the medium term, although the prices did manage to break above that range, it's too early to say whether or not we're seeing the start of a new uptrend. And our final pair for today, we can see Aussie dollar being capped by the descending trend line there. So that descending trend line of the medium-term downtrend that started all the way back in January this year. If prices do manage to break above that trend line, we could then see the top that we saw at the end of earlier this month, in fact, around 0.7483. So that should be the next major resistance. And then further up, we've got the top from the end of May, 0.7676. However, if we look at the momentum indicators, RSI didn't manage to break above the 50 neutral level when we saw those big gains on Friday. So the near-term outlook is very much neutral, perhaps tilted slightly to the downside. Immediate support should come at around the 50% Fibonacci retracement of the up leg from 0.7310 to 0.7483. That's around 0.7395, just below the 0.74 handle. If we do see sustained drop below that level, we're going to see that 1.5 year low of 0.7310 coming back into focus, and a breach of that low, we could then see the next major support coming from the 161.8% Fibonacci extension at around the 0.72 handle. That's it from me. Thank you very much for watching and have a great day.